Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today we're talking about the 6-year rule for capital gains tax, a topic that causes a lot of confusion, especially for Americans. Let's clear this up right away. The 6-year rule is an Australian tax law, not a US one. If you're in the United States, we have our own powerful tax break for homeowners, and it's called the Section 121 exclusion, more commonly known as the 2 out of 5 year rule. This rule is fantastic because it can let you sell your main home and pay absolutely zero capital gains tax. Here's the deal. To qualify for the full exclusion, you have to pass 2 simple tests. First is the ownership test, meaning you must have owned the home for at least 2 of the 5 years leading up to the date of sale. Second is the use test, which means you must have lived in the home as your primary residence for at least 2 of those same 5 years. A great feature of this rule is that the 2 years don't have to be consecutive. You could live in the house for a year, rent it out for a couple of years, and then move back in for another year before selling. As long as you rack up 24 months of living there within that 5-year window, you meet the test. If you qualify, the tax savings are huge. A single person can exclude up to $250,000 of profit from their taxes. For a married couple filing a joint tax return, this amount doubles to an incredible $500,000. Imagine you're a couple who bought a home for $400,000 and later sell it for $850,000. Your capital gain is $450,000. Because that's under the $500,000 limit, you would owe nothing in federal capital gains tax. This applies only to your primary residence, which is your main home, not a vacation house or a rental property. Now, what if you have to move before hitting the 2-year mark? The IRS allows for a partial exclusion in certain situations, such as a job change that requires a move of at least 50 miles, a health-related reason, or other unforeseen circumstances like a divorce. In that case, your exclusion would be prorated. For example, if you lived in the home for 1 year instead of 2 due to a qualifying reason, you could potentially claim half of the full exclusion. Understanding this 2 out of 5 year rule is essential for any American homeowner because it can save you a massive amount of money when you decide to sell. Thanks so much for watching. If this explanation helped you out, please consider hitting that like button and subscribing to the channel for more straightforward guides on taxes and personal finance. We'll see you in the next video.